there's a number most people never calculate. It's not their salary, it's not their rent, it's what they lose, quietly. Every year, just moving money between two currencies. Banks call it a conversion fee. Psychologists call it something else, because the damage isn't in one big charge, it's in 100 small ones. Coffee in Lisbon, rent in New York, a subscription billed in dollars while you get paid in euros. Each one, a tiny leak. Today, we are going to fix that properly, not with a top 5 cards list, with the actual system. Here's who this is actually for. You live in Europe, but you get paid in dollars, or you live in the US. But half your life, your rent, your family, your business runs in euros. You're not a tourist. You're not on vacation once a year. You're crossing currencies every single week. And that changes the math completely. Most best travel card content is built for someone who converts money twice a year, for a 2-week trip. That advice will quietly cost you if you're living, not visiting, across 2 currencies. Visual. Close up on a card being tapped at a payment terminal, in slow motion, because the real cost isn't the sticker fee. It's 3 things stacked on top of each other, and almost nobody separates them. Most people only ever see the first one. The other 2 are invisible by design. So let's be specific. This is for the software engineer in Berlin, billing a US client in dollars. The consultant in Chicago, retaining clients in London and Frankfurt. The couple with one partner working remote for a European company, while the other still earns in dollars back home. The retiree splitting the year between Florida and Portugal. Different lives, same leak. So, before we rank a single card, you need to understand the trap that makes even good cards fail, and why almost nobody notices it happening. You're in Paris. You tap your American card. The terminal asks a simple question. Charge you in dollars or euros? It feels like a courtesy. It's not. It's called dynamic currency conversion, and it is one of the most profitable, least understood tricks in retail finance. Here's the mechanism. When the merchant converts the price for you, instead of your bank doing it, they set their own exchange rate, not the market rate, theirs. That markup is usually somewhere between 3 and 7%, buried inside a number that looks like it's doing you a favor. And here's the psychology behind why this trick is so effective, even on people who know better. Seeing the price in your home currency at the exact moment of payment feels like certainty. It feels like control. You know exactly what's leaving your account, in numbers you understand instantly. That feeling of certainty is exactly what's being sold to you, and you're paying a premium for it. A premium that has nothing to do with actual safety and everything to do with comfort. The fix is almost embarrassingly simple. Always choose the local currency, every time, no exceptions. Let your own bank or card network do the converting. That's their job, and their rate is almost always better. But here's the part that actually matters for this video. Even if you avoid that trap perfectly, your card can still bleed you slowly through its own foreign transaction fee, 1 to 3%. On everything. Every swipe. On a normal year of cross-border spending, that's not pocket change. That's a flight. Sometimes 2. Let's make this concrete. Say you spend $3,000 a month across 2 currencies, rent, groceries, the occasional trip home. A card with a standard 3% foreign transaction fee costs you about $90 a month, just in that one fee. Add a merchant who defaults you into their currency at a 6% markup on a fifth of those transactions, and you're looking at over $1,500 a year, disappearing in increments too small to ever notice on a single statement. That's not a rounding error. That's a plane ticket to see your family, twice. So rule number 1, before any card recommendation. The card itself has to charge 0 foreign transaction fees. Full stop. If it doesn't, nothing else about it matters. If you're a US resident who spends heavily in Europe for business, family, or relocation, your first lever is a premium US travel credit card, not for the rewards points. Those are marketing. What matters is 3 quieter things. 1, 0 foreign transaction fees, confirmed in the fine print, not assumed. 2. The network. Visa and MasterCard are accepted almost everywhere in Europe. American Express and Discover are not. If your primary card is an Amex, you will get turned away at small restaurants, markets, and rural businesses. Every time. 3. The chip. This one nobody warns you about. Most US-issued cards are chip and signature. A lot of unattended machines in Europe, train ticket kiosks, toll booths, self-service parking, required chip and PIN. Your American card can simply fail, silently. So the psychology here is important. A premium travel card isn't a status symbol, it's infrastructure. The reward points are a bonus. The real value is what it prevents. The fee, the decline. The moment you're standing at a machine that won't take your card, with a train leaving in 4 minutes. The strongest cards in this category tend to come from Chase and Capital One. Both issue widely across the Visa and MasterCard networks. Both waive foreign transaction fees on their travel tier cards. And both let you set international travel alerts so a Paris coffee doesn't trigger a fraud freeze on your card in New York. That last point sounds small. It isn't. An unexpected international charge is the single most common reason a US card gets frozen mid-trip. And most people find out the hard way at a checkout counter with a line behind them. Now, a quick word on annual fees. Because this is where people talk themselves out of the right card. A premium travel card might carry a fee somewhere in the $100 to $600 range, depending on the tier. That number looks scary in isolation. But measure it against what you're already losing to foreign transaction fees and bad exchange rates. For a regular cross-border spender, the card usually pays for itself within the first few months, before you've counted a single reward point. The mistake isn't paying an annual fee. The mistake is paying one and still getting hit with foreign transaction charges on top of it, which happens more often than you'd think, because people assume premium automatically means zero foreign fees. It doesn't. Always confirm it in writing. Now flip the entire scenario. You live in Germany, Portugal, or Poland, but you're paid in dollars, freelance clients, a remote US employer, a business selling into the American market. This is where things get genuinely painful, because European banks are just as guilty of hiding markups as American ones, sometimes worse. A European debit card used to withdraw or spend dollars will often route through your bank's own conversion desk, at a rate that's rarely disclosed clearly and almost never competitive. The instinct is to just accept your salary in euros and never think about it again. But if a meaningful portion of your income or spending happens in dollars, converting through your regular bank quietly erodes it, a little on the way in, a little more on the way out. The fix mirrors what we covered for US residents, just reversed. A euro-based multi-currency account that can also hold and receive USD directly, without forcing an immediate, automatic conversion the moment funds land, puts you back in control. You decide when to convert, not your bank's default settings. This matters most for freelancers and remote workers specifically, because you're not just spending across currencies, you're being paid across them too. That's a second layer most travel content never even mentions. Losing money on the way you receive income is just as real as losing it on the way you spend it. Often, it's the bigger leak of the two. So here's where it gets interesting. Because if you're not just traveling, if you're actually living between two currencies, a credit card was never the right tool to begin with. Visual, text, the real fix isn't a better card. It's a different account structure. What you actually want is a multi-currency account. Something that holds euros as euros and dollars as dollars, instead of forcing every transaction through a single home currency and converting it twice. This is what companies like Wise and Revolut built their entire business on. You hold real balances in dozens of currencies inside one account. When you spend in euros, it pulls straight from your euro balance. Zero conversion. When you spend in dollars, same thing, it pulls from dollars. You only convert when you actually want to, and when you do, it happens at something close to the real mid-market exchange rate. The same rate banks use with each other. Not the padded rate they sell to customers. that difference compounds.
Can make a big difference.
If you're moving a few
On the
thousand
left,
euros
a
or dollars a
traditional bank
month,
with a 4 to 6%
which,
markup.
if you're
On the
paid
right, a
internationally
multi-currency
or
account
running
with
a
under
cross-border
1%.
business,
When you transfer
probably
thousands
are,
every month,
that
the
gap
cost
is not
compounds.
trivial.
The difference
It's
becomes
real money
significant.
every single month quietly staying in your account instead of leaving it. The trade-off is this. These are typically debit-style cards, not credit cards. So you're not building a credit history or earning premium travel perks. What you're buying instead is precision. You spend in the actual currency you're holding, at close to the real rate, with none of the layered fees. You give up rewards points. You give up purchase protection on big-ticket items. In exchange, you get a system that simply doesn't leak, no matter how many times you cross a border in a given month. And this is the part most content misses. The two systems aren't competitors. They are not pick one. A premium travel credit card and a multi-currency account solve two completely different problems. One is for building credit and earning value on discretionary spending. The other is for eliminating conversion loss on your actual cost of living.